How do you see this calendar year? And
See, the economy actually has been doing quite well. If India manages to reach a trade deal with the US, you could see some kind of appreciation happening in the rupee.
sectors that you love and you don't?
We really like the auto sector. We have a negative view on banks. I am not sure whether it is there in the DNA of Indian pharma companies to suddenly become innovative.
What would you advise a trader or an investor in markets like this?
It's very difficult to make money in the broader market. It's a good time to be hunting. It's a good time to look at small caps and micro caps.
Factors that you think can spoil the market sentiment.
Trump comes to power. Our Indian government was the first to reach out to Trump for the bilateral treaty.
True.
We don't know when it will happen. Whenever it happens, it will be a positive.
Hello all and welcome to the next episode of Bold by BlinkX. Today we have a market veteran, Venkatesh Balasubramaniam, called Venki. Hi Venki, welcome to the show. Venkat has been the pioneer of institutional research for JM for many years, and we are glad that we have Venkat today to speak about the markets and some oft-repeated questions that traders and investors ask us. Thank you so much, Venki, for being part of this show. Thank you so much. Appreciate it.
Thank you for having me on your show.
Thank you. Venkat, let me start with a very basic question. Economy roundup. How do you see this calendar year and laggards, green shoots, anything?
See, the economy actually has been doing quite well. So, we are perhaps the fastest growing economy in the world. We should end this financial year with a GDP growth of somewhere between 7.2 to 7.5%.
Wow.
So, all hunky-dory on the economic growth part. Now, coming to the second aspect, which is maybe inflation. Again, inflation is at very low levels. I think previous month inflation was at around 0.25% or so.
Okay.
In this month, it was at 0.7%. So, very comfortable levels. Inflation again is not a problem. The RBI has cut interest rates because inflation has been low. RBI has cut interest rates by almost 125 bips so far this year.
True.
Maybe we are towards the fag end of the rate cut cycle. Maybe we won't have one more rate cut, or maximum you could have maybe another 25 bips kind of a rate cut. So this is on inflation and interest rates. The problem which we have been having is the rupee depreciation which is happening against the dollar. So now I think rupee has breached 91.
Yeah.
Now obviously that is something which is worrying people. Now why is that happening is there are a couple of reasons. One is obviously that India has been unable to reach a trade deal with the US. So that is one problem. The second problem is the fact that foreign institutional investors have been continuously selling in India for the last 12 months. So that is the second bit of the problem. Now, what can provide some relief is if at some point in time over the next 6 months or maybe 3 months, if India manages to reach a trade deal with the US, you could see some kind of appreciation happening in the rupee.
Okay.
So, if you see as of today, growth is not a concern. Interest rates not a concern, inflation not a concern. The only problem is the rupee depreciation which is happening. Now, even when I actually kind of break down the growth into multiple parts, the government has done a couple of beautiful positive things.
True.
One is they cut income tax in somewhere around Feb 2025. Correct. And then in September, they have gone and cut GST.
True.
So they have kind of given a major fillip to consumption. So you will see consumption going up, starting, we have already started seeing consumption going up from October onwards. So that's a very big positive theme for us, consumption going up. But on the flip side, when you cut taxes, what happens is your tax revenues come down.
True.
So if tax revenues come down, there are a few question marks on what happens. Will we meet our fiscal deficit target?
True.
If we have to meet our fiscal deficit target, maybe we'll have to pull back on Capex. So these are certain things which one needs to monitor.
Wonderful. But on the Capex front, is the government doing enough, or is there something that we need to worry about?
No, I think the government is doing enough.
Okay.
See, it's like this. Let's take it back to 10 years. So if you were spending, let's say, 100 rupees on Capex every year, over the years, every year it has kept going up.
True.
So now if the number is at 200, you can't keep growing 200 at the same pace.
True.
So the law of large numbers come into play. So even if incrementally the growth might be lesser, the absolute numbers are still very, very huge.
Okay. So
I don't think Capex per se is a concern. And even if the government pulls back a little bit on Capex, it is still okay. See, because you need to have productive projects to spend money on.
absolutely.
You can't just keep spending money without there being an end use for that particular project.
True. Okay. So that's where you're coming from. Now that, the fact that you've been in research for so many years, Mikey, just one question on the debate that typically, research guys have in terms of depth and speed in the market, which is always on, right? So how do you balance both?
See, it's a very difficult thing to balance. See, some bit of information comes, right? Immediately what happens is the stock prices start reacting.
Correct.
So everybody is asking for your view. But if you do half-baked analysis and give, you might end up giving a wrong output to the market. So the question is, should you give half-baked information or do proper research and then come out with a proper view? Now, this is a call which every firm takes. It's a call that the firm needs to take. At JM, we prefer doing in-depth research and coming out with a proper view. But of course, we are trying to do that as fast as possible.
Possible. Yeah.
So that is how I would answer it. Difficult to balance both. You can't be at one extreme. We are somewhere in the middle, maybe tending towards the in-depth research rather than
Part. Then there's P part. Obviously, you also have to ward off the temptation that comes from clients, right? Saying, "Kya lagta hai?" Because
you should know kya lagta hai before telling somebody else kya lagta hai. That is the key thing.
That's the key thing. Okay.
Correct.
And then you back it up with research.
Yes.
Oh, awesome. Got it. So there are so many companies which get into high quality research, right? This is typically for our traders and investors who have this question in terms of what is high quality research. How do you define quality research?
How do you define quality research? Now, that's kind of a tough question.
Yeah.
Now, whether you have looked at all the aspects, positives, negatives.
Absolutely.
Right? That is one part. Very simple answer.
True.
Because you might be recommending something to somebody, but have you looked into the aspect what could go wrong?
Yeah.
So that is one part. Now, but for research, first of all, you need to have access to information. So the way information access has changed dramatically over the last 10, 15, 20 years.
Okay.
So if you go back in time, let's say 15 years back, what happened is, let's say there is an analyst and he's covering a company in Delhi.
Correct.
So he used to go to Delhi and come back. So till the time somebody else went to Delhi and calculated that information, he was the only person with that information.
Okay.
Correct.
And
so there was an information asymmetry.
Absolutely.
Correct. That has been, those walls have been completely broken out.
Yeah.
Because SEBI also has this thing about simultaneous dissemination of information. So what you tell, you cannot tell one analyst or one investor selective information which you are not giving to the market. If you give any fresh information, you have to put a disclosure on the stock exchange. Okay, so everybody has information at the same time. So that is one part of it. The second part of it is the fact that you have now all companies have regular quarterly conference calls.
True.
Correct.
Yeah.
Secondly, everybody after the result, usually they are either on one of the business television channels coming and telling you about the result.
Correct.
So that ability to play on the fact that I have more information than anyone else has progressively decreased, which is a very positive thing for the Indian stock market. That is how it should be for everyone.
True.
So that is one thing. So that is one part of it. The other part of it is the fact that there is a lot of information today available to the retail investor, which is at par with what is available to the institutional investor.
Wow.
And just to give you a few examples, even though it is taking a little bit long.
But that's it, Nandi.
Look at it this way. Earlier, whatever disclosure used to come either on the Bombay Stock Exchange or the NSE.
Correct.
It might be possible that for a retail investor, it is difficult to figure out where that information is. Right?
Correct.
But today you have fantastic websites like, for example, a screener. It's called screener.in.
Correct.
So you get that information in one place. Whatever presentation the companies are uploading, screener is putting it on their website. That is the same information that the institutional investor is also looking at.
True.
They are giving you the transcripts of the conference calls on those websites. They are giving you a summary of the transcript. Okay.
It can't get more foolproof than this.
Yes. So
Yeah.
Information is available to everyone. It is just that you need to make that effort to get this information. Again, this thing, there is this era of YouTube.
Correct.
And fin influencers. So you have a lot of them. Now, obviously, SEBI has been a little careful what can be communicated by the fin influencers. But I have myself seen so many videos which are very, very informative.
True.
Which give you a starting point for your analysis to do your research. So it's a good place to get ideas. It's a good place to get information. But of course, you need to add that additional layer of doing research on your own.
Do your own homework despite whatever.
Don't just believe everything you see or read.
Absolutely.
So once you use that as a starting point, dig for more information. So that way, as a retail investor, you can definitely improve the quality of research.
Wow. So, despite the plethora of information available in the digital universe, you have to still go back, do your homework and come back with your own decision making.
Correct.
That's exactly what you're advising. Awesome. Something very close to your heart, sectors that you love and you don't, and why?
Okay. So earlier, I think when we were discussing the economy, I said consumption can be a significant positive over the next 24 months. So we really like the auto sector. So the GST rate cuts have had a tremendous boost on both entry level two-wheelers, four-wheelers and even tractors.
Correct.
So that is something we definitely want to play. So that's a good sector to be invested in, auto, right now. Secondly, consumption is a big theme. So you could think about something like consumer staples. Initially, when GST was implemented in the month of September, there was a disruption in the market. New rules came in.
Correct.
But already when we are doing our channel checks, we are seeing consumer staples volume growth is going up. So that is another sector where people can definitely consider. Consumer discretionary is very interesting. Even consumer durables is something which is interesting. Correct. So these three sectors. We also have a contra positive view on hotels and real estate.
Okay.
Okay. And we like NBFCs, non-banking financial companies. So these are the companies sectors which we actually like. One thing which I missed out is internet platform companies is another way to play the consumption theme. So we are positive on that also. Now coming on the sectors which we are negative on, please remember this is slightly over the short term. By short term, I mean by 6 to 9, maybe 6 to 12 months kind of perspective. We have a negative view on banks. Okay. And the reason being that you've seen RBI, I talked about RBI cutting interest rates for 125 bips. When RBI cuts interest rates, what happens is the NIM actually compresses.
Absolutely.
If NIM compresses, the possibility of you getting EPS growth is very less.
True.
So, and my experience of 25 years in the stock market, what it suggests is till the time there is EPS growth, you can't, if there is no EPS growth, you can't get stock returns.
Absolutely.
Right. So over the short term, we are negative on banks. We will get more constructive maybe when we start the new financial year next year. Maybe we'll have a relook at it maybe somewhere around April or May. So that is one sector we are negative on. The second sector we are negative on is maybe the IT sector. We believe both short term and long term structurally there is a problem. You must have heard about the mushrooming of global capability centers in India.
Yeah.
So if your client is going to come to India and set up shop and hire the same engineers that you are hiring,
Correct.
give them a slightly higher salary, and they are basically not going to give you incremental business.
True.
Correct. So if you look at, let's say, large cap IT stocks, their growth rates have slowed down to 5%. Will this trend of GCCs setting up office in India change? I don't think so, because it's been a very successful experiment.
Correct.
Second thing is, I personally believe over the medium term, Indian IT could be a major loser to AI.
Absolutely.
So we are negative on IT. Pharma, again, another sector we are negative because the sector is expensive. And a lot of generic companies who export outside India, they have huge drug concentrations. So over the next couple of years, you could see earnings decline. So it's not a sector which we like. In pharma, rather than generic API, generic companies who are exporting outside, we would prefer hospitals is something which we like. We also like CDMO sector.
Okay,
There are two sectors which we like. We don't like generic companies exporting outside India. Now, I think that kind of, utilities is another sector we are not too positive about. There are no triggers. Stocks are very expensive. So these would be some of the sectors which we don't like.
So traditionally, when we speak about the pharma, we have always been a little low on the R&D stuff, right? As far as pharma is concerned. Now, given the slight negativity tilt that we have, at least for the 6-9 months, right? You're hoping and praying that there is some kind of a directional view that at least the key pharma players can probably start taking on maybe upping the R&D.
R&D. See, R&D is a very difficult thing because you might be doing R&D on 100 different drugs.
Correct.
Correct. You have to spend billions of dollars on identifying the molecule. Then you have to do animal testing.
Correct.
If it succeeds, then you have to be carefully do human testing, right?
Yeah.
And then you need to get multiple approvals before you can actually roll it out.
So it's a 10-year program.
So it's a very long program. You need to have very, very deep pockets. So you see globally there are only select number of innovator companies who come out with new drugs. Most of the other companies are either like once the drug goes out of patent, that is when they actually start making copies of that drug. So it is not, I don't know, there have been a few companies in India who have tried attempting doing this. I am aware of, for example, Sun Pharma, who has a separate company. I think it is Sun Pharma Advance. I'm forgetting the full name, but I think it's called Spark. Right. So they have attempted, they have had a few successes, but it's not an easy job. I am not sure whether it is there in the DNA of Indian pharma companies to suddenly become innovators.
Okay. So they would rather have.
If you see, it's almost like 90, let's put it this way, 90, almost 80% of the innovation globally actually happens in the US.
Correct.
Because that economy is positioned in such a way to innovate and come out with new things.
Absolutely.
There was an era where Europe also used to innovate, but now Europe also has become very dependent on US as a country. Now, can India change? Of course it can, but it will take time, is my view.
Lovely. So we spoke about the positive aspects, the interest rates, the cut of taxes and GST and stuff like that. So tilting the question a little, Venki, factors that you think can spoil the market sentiment.
See, what has already spoiled the market sentiment is the fact that, see, it's like this. Let's go back in time. Trump comes to power, and we think Trump will be very positive for India.
Yeah.
Correct.
Yeah.
And I think our Indian government was the first to reach out to Trump for the bilateral treaty.
True.
So we thought we will be at a benefit compared to almost all the countries.
Yeah.
So we would be at a benefit to even China. So a lot of business will come to India.
Correct.
But unfortunately for you, what has happened is we have the highest duties in the world along with Brazil at 50%.
True.
So that has already spoiled the market.
Yeah.
Correct. Now, we also hear sound bites every now and then, either from political leaders or it could be from people in the market who tell, that we are very close to a trade deal.
Yeah. You're wrong.
It is going to happen in the next month.
Yeah. You've been here.
But we have been hearing will happen in the next 1 month for the last 6 months.
True.
Correct.
True.
And then when it doesn't happen, it has again a negative impact.
Very true.
So I personally believe you can't do anything about everyone, but at least the financial talking heads on TV shouldn't come and tell that it's going to happen within 1 month.
Yeah.
They should all keep quiet, or what they should do is, we don't know when it will happen. Whenever it happens, it will be a positive.
Absolutely.
That is the right way to put it.
And we are hoping, praying that it will happen.
And actually nobody knows.
True.
Because since Trump has come to power in the US, I don't think anything is happening based on, I don't think what has happened you've been able to predict.
Correct.
Everything, he's as unpredictable as possible.
True.
So why are they here trying to predict when the trade deal will happen? We don't know. I don't think anyone knows. So I believe that if somebody communicates it that way, maybe people will stop worrying about it, and the day it happens, it will be a positive.
Obviously. I mean, quite upfront on the way you actually presented the sentiment that could possibly go wrong for the market. Amazing. And knowing Venki, it can't get bolder than this. Your take on the markets in the next 12 months?
See, again, last 12 months, For the last 12 months, we've been telling people you can't make money in this market.
Yeah. I mean, I saw a couple of your interviews too.
Yeah. So, because the market is too expensive.
True.
If your starting valuations are very high, it's very difficult to make money.
Absolutely.
Now, we are telling the same thing for the next 12 months. It's very difficult to make money in the broader market.
True.
Because the markets are still expensive. Can you make money in individual stocks here and there? Maybe. But at a portfolio level, it's going to be very tough to make money. Even if you make money, maybe it is going to be single digit kind of returns is our thought process.
Correct.
Now, why is that? Now, forget the fact that I am telling you that the market is expensive. True. Is there proof for you in the market that the market is expensive? Of course, there is proof. You have, what do you have? All the, who knows the company best? The owner of the company knows.
Absolutely.
So if all the promoters are raising money at this point in time, either through IPOs, which basically means they have done a lot of work over the last 10, 20 years, they are cashing in right now. True. All the private equity investors who have invested in this, they are selling through blocks. So, and foreign institutional investors are telling you it is expensive, we rather invest in other markets. Yes. So that is a clear sign for everybody that the market is expensive. I don't even need to use numbers to prove it.
Absolutely.
So, very difficult to make money. At best, I believe next 12 months, you're looking at single digit returns.
That's where it is right now.
Yes.
But so long as we know how to keep our expectations in check,
correct.
I think.
See, for you, unfortunately, everybody tells you at the start of the year that this year we can make 15% return. I think you would have heard the same story for the last 10 years that we'll make 15% return this year.
Absolutely.
So, it's a tough market to be in right now. So, difficult to get super positive about the market. So,
at least for the next 12 months.
At least for the next 12 months.
So, as a corollary to that, Aki, what would you advise a trader or an investor in markets like this?
Now, again, what I would advise a trader would be very different to an investor.
Absolutely. Absolutely.
What I understand is traders make money in trending markets.
Yeah.
So, either you know the market is going up, so you go long on the stock.
Correct.
Or you know in a trending market is going down, you short the stock. There are two ways to go about it. When the market goes sideways, I don't think traders make too much money. Because you really can't predict on a daily basis what is going up and what is coming down.
Absolutely.
So, it's a very tough market for traders, is what I think. Now, coming to investors, I would tell investors that look at it this way. Progressively, certain pockets, which is small caps and mid caps, while the large caps are not correcting, small caps and mid caps, we are seeing big drawdowns.
True.
Correct. So, I have even seen 30%, 40%, even 50% kind of.
Absolutely.
So, it's a good time to be hunting and analyzing small caps and mid caps. More than mid caps, I would say it is a good time to look at small caps and micro caps.
Wow.
That universe is becoming very, very interesting. There are lots of stocks which are interesting. Valuations are becoming reasonable. The next 12 months is the right time to analyze them and invest in some of them for the long term.
Yeah.
So, you should not look at trying to make returns in the next 12 months. Are you finding the right value with the right story in the next 12 months is what you should look at.
Good. I think the message is loud and clear for traders and investors in terms of how you go hunting for micro and small caps in a market for the next 12 months. Yeah. Great, Venki. I mean, this was stimulating the intellectual genes for us. Let's have some fun with Rapid Fire. So the questions will be something that is as a child's play for you, but no thoughts given. You need to just shoot your answers. Okay. One market consensus you disagree with right now.
That if you invest in a SIP, you always make money.
Wow. Speed or depth? What matters today?
I think depth is.
Depth. So, I mean, you're consistently saying depth is what matters. So, one habit that improved your decision making on the last.
Okay, it would take slightly longer to explain.
Absolutely.
Something which I learned over time that, they teach you, if you study economics or you go to an MBA school, they teach you something called the sunk cost fallacy.
Absolutely.
Correct?
Yeah.
I'll give you an example. Let's say I bought a stock at 100. The stock went to 90. Correct?
Yeah.
What do most people think? Arey, I've lost 10 rupees. I'll sell it when it crosses 100.
Correct.
Right?
Absolutely.
But that is not the right way to look at it. You should think at 100 you bought, at 90 should you be booking the loss? Because the question at that point in time is, the way you should evaluate that stock is, should I be holding this stock at 90, what is the return possible over the next 12 months? Or rather, let's say you are very clear next 1 year that 90 can go to 100 and I'll break even.
Correct.
But what if you find another stock where you're convinced that 90 can go to 120? Isn't it better you sell this stock and buy the other stock? So this getting over the sum cost fallacy is something which I learned over time, which has been very helpful.
And it's a very emotional conversation, right? Because it's easily, you don't let go of something that you bought.
Correct.
That's something that I've also seen over the years, how investors and traders behave, that if you lose money, somehow some of them think that I will make out of the same stock.
There is a popular joke. We say that where you lose money, all those stocks become long-term investment.
True. Absolutely. That's a good one. That's a good one. Finally, what excites you about the Indian capital markets today?
See, what is super exciting is the fact that one is obviously the financialization of savings.
True.
So that is a super exciting thing.
Yeah.
People are looking beyond, let's say, gold and real estate.
Yeah.
So that is a very positive thing. People are looking at stocks as a way to create wealth over the longer term.
True.
The second aspect of the fact is, earlier what you would see that the people who are investing in the markets were usually people who were 40 plus or 50 plus.
Yeah. Yeah.
Correct. So now that has changed meaningfully. You have people as young as 21, 22 investing. So people are investing with their first salary. That is very different. And that has been possible because of the mushrooming of the newer apps, which are very easily
Accessible and user friendly.
easier to use. It is faster to open an account.
Correct.
It is easier to put a trade.
Yeah. So you get instant gratification, you have to stop.
So you can, but while everything is becoming very easy, see, it's even something like this. With the advent of cards, a credit card,
True.
people spend more. With the advent of UPI also, you spend more because that thing of giving cash is not there.
Correct.
Right?
True.
Similarly, when something becomes very easy to do, you tend to do it too much.
Yeah.
So, while this is a positive, you should also be careful about the negative side of things. Do your research properly and then invest. Invest preferably for the longer term. Don't invest in the hot tip.
Yeah.
Okay.
That's a good one. Don't
Invest in the hot tip. There would be a lot of people who will come and tell you, I bought this stock, it has gone up 5 times. But usually, let's say they are telling you the truth first.
Correct.
Let's assume they are telling you the truth. It is possible that they might have bought another 9 stocks which have come down.
Absolutely.
They will come and tell you only their success story.
Yeah. It's very tough to
And when they bought those 10 stocks, I don't think even they knew which stock is going to go up 5 times.
lose it.
So, it is very important you do your own research.
Yeah.
If you are unable to, or you are not in a position to actually do that research, give the money to the professionals. And I think the best way to do it is to maybe invest in mutual funds.
I mean, that's typically how the landscape.
Correct.
Oh, it was awesome, Venki, to be part of the show. And I think our investors and traders learned as much as I did. And we hope to have you again in the show in the near future. Thank you so much, Venki. And that ends the edition of Bold by BlinkX. Thank you all.
Investments in securities markets are subject to market risk. Read all the related documents carefully before investing.